Hello and welcome to an FXTimes daily market recap. I'm your fundamental market analyst, Nick Nassad. Today is Tuesday, March 2nd, 2010. We begin today's broadcast with a look at the Reserve Bank of Australia, which last night bumped up its benchmark interest rate by 25 basis points to 4%. That's the fourth time since the height of the financial crisis that the RBA has lifted rates since it was at a 3%, which was a 49-year low. The reason for the hike is a strong jobs boom, as the economy has added 195,000 jobs in the past 5 months through January, and the unemployment rate has hit an 11th month low of 5.3%. These are very positive signs that the Australian economy is recovered from the global recession that we have seen last year. The RBA Governor, Glenn Stevens, said that it's important for the RBA to bring interest rates closer to average, which he said may be another 75 basis points higher than the current rate in comments last week. In yesterday's statement, he said that there are concerns over sovereign debt and the fiscal problems in Europe and elsewhere, which could threaten the global economy. So there's a chance that in April, the RBA pauses like it did in December. He believes that growth in 2010 is likely to be close to trend and inflation close to target. In other fundamental data from Australia, we saw the retail sales for the month of January rise 1.2%, which is a better than expected report and is a good rebound following December's 0.9% decline in sales. However, building approvals for the month of January slid rather sharply by 7%, which could be an indication that the higher interest rates are filtering down into the housing market. Still, credit for housing is expanding at a solid pace, and housing prices have been rising significantly this year. In a look at the Aussie-US dollar pair, we see that prior to the release, we had been running up against the 0.9015 area, which was acting as resistance, and following a volatile candle after the release, we settled down, and the Aussie wound up gaining and moving above this resistance level. Zooming this pair out slightly, we see that we tested our highs from February 23rd, and we could see that we had been in this sideways consolidation pattern throughout most of late February. So this will be an important test now around the 0.9050 level to see if we go back to perhaps test the 0.93 level. Looking at this pair over the past 2 months, we see that we had a sharp slide in favor of the greenback in January as gold prices fell, but we broke this downward sloping trend line around February 14th, and since then we have been consolidating. So we'll see if perhaps the markets have finished this sideways action and we are ready to extend this uptrend that had started in early February. If we project the rally from February 7th to February 14th and line it up with our lows here, we see that our projection falls to about the 0.9250 level. However, we need a pretty clean break of this resistance zone in order to see this move come to fruition. We had a second monetary policy decision, this time in New York morning trading from the Bank of Canada. While the bank held rates at 0.25% and kept its conditional commitment to keep rates at that low level until the end of the second quarter, the Bank of Canada did acknowledge that the level of economic activity in Canada has been slightly higher than the bank projected in January, with core inflation slightly firmer than projected. Also, the bank dropped a reference to retaining policy flexibility, which suggests that additional monetary easing is no longer on the table. Overall, that's a rather hawkish statement, and the Canadian dollar extended gains it had seen overnight following the release. Taking a look at the US dollar Canadian dollar pair, we saw a break below the 1.05 level in yesterday's trading following a better than expected GDP report from Canada. And overnight, we moved below the 1.04 level, which coincided with European trading and higher risk appetite as global equities were higher. Following the Bank of Canada decision, we hit a low near 1.03. That is the lowest we've been in this pair since back in January 20th. So we managed to clear this level of support we had around 1.0350 from February 21st. We may have some support now, especially if we connect these lows, and we may pause here for the rest of today, but definitely traders and investors took the Bank of Canada statement as a small incremental step towards eventually tightening monetary policy. We've seen that Australia has been right now the only developed nation which has been raising rates, but Canada, with its fundamental profile, should be next on that list. As a result, the Canadian dollar may look to retest its lows around 1.0250 that we had seen in January. In a look at the euro-dollar pair, we saw the euro gain in today's trading following another test of 1.3450 overnight, which was rejected rather sharply. The euro could see some support the rest of the New York session as investors expect debt-pressured Greece to introduce new austerity measures in tomorrow's session. The Greek government will announce as much as 4.8 billion euros of additional deficit cuts tomorrow, bowing to pressure from the EU and investors to do more to put its fiscal house in order. If those plans are to European policymakers' liking, we may see by the end of the week some guarantee regarding Greek bonds. The premium investors demanded to buy Greek government debt over comparable German bonds, which is the European benchmark, fell 15 basis points to 3.01%, which is the lowest in 3 weeks. Also, credit default swaps linked to Greek government bonds tumbled 31.5 basis points to 313 basis points, the lowest since January 18th, another sign that the situation around Greece is becoming less risky. So we'll see what this price action means for the pair, if perhaps we're seeing a bit of a triple bottom at this 1.3450 level, which is about a 10-month low for the pair. Also, we have the ECB policy decision coming on Thursday morning, so traders may be awaiting word from ECB President Trichet on what the central bank plans to do in regards to Greece. It seems that a lot more will become clearer about the situation by the end of this week. In data from the Eurozone overnight, we saw the flash estimate of consumer prices for the month of February in annual terms cool somewhat from January's 1% as the reading came in at 0.9%. Producer prices, meanwhile, for the month of January were up 0.7% following a rise of 0.1% in December. So we're seeing that prices, at least on the consumer side, are not yet presenting the ECB impetus to move on raising interest rates. In a final pair for today, we're looking at the pound dollar, which we saw had a very sharp drop in yesterday's trading, but we seem to be trading sideways, and the greenback is consolidating its gains as we trade within about a 100 pip range in today's trading. If we throw a Fibonacci study onto our fall from yesterday, we see that our retracement has reached the 50% level, and that has been acting as resistance in today's trading, with support around the 23.6 area. Here too, traders are likely awaiting Thursday's Bank of England interest rate decision. Now let's turn our attention to upcoming fundamental releases. And tonight, Australia posts two important pieces of data, including the measurement of services activity and the fourth quarter GDP figures. Fourth quarter GDP is expected to be rather strong, with a 0.9% gain following a 0.2% rise in growth in the third quarter. Also tonight, the UK will post data on consumer prices and retail inflation. Overnight, Germany releases its retail sales. The Eurozone posts its final version of February services PMI, as well as a measure of retail sales, and the UK also posts its services PMI. Tomorrow in the US at 8:15, we get the ADP employment change, which is a curtain opener for Friday's non-farm payroll report. Also at 10 a.m., we get the ISM non-manufacturing index, which is our most timely measure of services sector in the U.S. At 2 p.m., we get the Fed's beige book, which outlines the economic situation in the U.S. So that will do it for today's broadcast. For more news, videos, and analysis, please visit FXTimes.com. I want to thank you for watching and wish you good trading.